Now, I think Eli gave a very good introduction to the subject. He mentioned that bond markets should play the role that they're supposed to play. What I'd like to do perhaps is to maybe define exactly what bond markets are, the role that they're supposed to play, and perhaps what integration means in respect to that role. So here's a very simple operational definition. For me, the role that bond markets are supposed to play is that it's supposed to provide debt financing for those across the region and to liaise with savers who have capital. And integration is about being able to do this in a very low-cost manner, having an unimpaired movement of capital between savers and the region. So that, for me, is a very simplistic definition of market integration. And I think part of the objectives of market integration include the broad development of markets, something that Tiam He mentioned, improving market infrastructure, perhaps even regional financial stability. That's also part of the integration element. And Dato' Wee has mentioned the recycling of savings in the region several times now. So I think very simplistically, the basic purpose of financial integration is that it reduces the cost of capital for Asian businesses and allow them to manage and to hedge their financial risks much more easily. Now, integration in Asia is a very significant challenge. And part of the reason for this challenge is that Asia, unlike Europe or the US, it's a very diverse market. Let's just have a look at a few interesting features of Asia to show that diversity. You can look at various metrics. Top left, you see the GDP per capita. Again, a huge diversity of different economies in Asia. Sovereign debt ratings, again, a big diversity. AAA Singapore and those that are below investment grade. The danger of presentations like this, we did this chart last week, and a few days ago, Philippines was upgraded by Fitch to AAA-. So I think probably Standard & Poor's will follow suit later on this year, we suspect. And look at the market yield curves. Again, you see a huge diversity of yields across the region, much more diverse than you see in the developed markets. So that's the challenge of integration for Asia. But this is the ideal. The ideal is a pan-Asia system of efficient capital flows where savers, either institutional or retail across Asia, can access pan-Asian markets through pan-Asian intermediaries. And that in turn is tapped by borrowers across the region. Now, why is this important? Well, one example we've talked about today on a number of occasions is infrastructure. Khun Phaiboon mentioned that there was about $8 trillion of infrastructure needed across Asia, and of course, in Thailand alone, there's 2 trillion baht that was recently announced as well. How do we actually get this financing moving efficiently? Well, we need a much more integrated marketplace. Dato' Wee mentioned that the whole purpose of integration was to be able to serve Asian corporations. And I think the problem that we face right now is that we're not serving them very, very well. Why is that? This is the ideal that we're trying to achieve. This is the current reality. Unfortunately, Asian markets are very fragmented. It discourages the recycling of savings within the region. Local savers mainly have access to their own local markets. These barriers encourage regional retail integration outside of Asia, i.e. through foreign intermediaries. This fragmentation also creates very inefficient intermediation, so it restricts investors' choices in terms of what they're able to get access to. Local currency borrowers, therefore, mainly have access to their local markets, which in turn creates the problem that Khun Surong mentioned, i.e. a lot of the financing is through dollars rather than the local currencies across the whole of Asia. Now, this is a little bit of pessimistic story, but I just want to point out that I think governments do recognize these issues, and I actually think that governments have done a lot to try to improve the state of market integration in the last few years. Let's have a look at some of the historical initiatives that have really done a lot to move forward integration. If you remember, I thought of integration as really these 4 developmental goals: broad market development, improving market infrastructure, regional financial stability, and recycling of savings in the region. Tiam He mentioned the Asian Bonds Online back in 2004, which did a lot to serve 3 of those goals. You also see that we also talked about the Credit Guarantee and Investment Facility, together with, of course, the ASEAN Infrastructure Fund more recently. So I think governments have actually done a lot to try to improve the state of the market, but definitely more can be done. So what I want to do is perhaps just give you an idea of things that have been done in the past as well as future initiatives to try to further improve integration. Let me just remind you, this was the sorry state of Asia's capital market integration. The fragmentation and the narrow, the foreign intermediation, as well as the preference to tap capital outside of Asia. So what are we doing to try to improve this? Well, I'm going to provide 3 case studies that State Street has been involved in the last few years. The first one is to try to improve this whole issue of fragmentation of markets and foreign intermediation. And this is a project under the APEC Business Advisory Council. It's called the Asia Region Funds Passport. There's actually a comparable project under ASEAN to try to improve the linkages of collective funds within ASEAN. I'll go into details of that project a little bit later. Here's a second area where perhaps integration can be improved. This is really to enhance investor choice, not just offering their local market products, but allowing them to access Asia more broadly. And of course, a good example of this is the Asian Bond Fund. The third example, which I think you might find interesting, is this whole issue of allowing local currency bonds to be offered across the region more broadly. And that's under the ASEAN Plus 3 Bond Market Forum. It's called the AMBIF, the ASEAN Plus 3 Multi-Currency Bond Issuance Framework. Working with governments, you get used to all these acronyms and you have to memorize them in order to succeed in this work. So first example, the ARFP, the Asia Region Funds Passport. The idea here is to basically tap into the increasing retail markets. We know that that integration across institutional markets is fairly good, but we also know that in the retail space it is ineffectual. The retail space is going to be one of the most important spaces in financial services. Just think about the economic growth in Asia Pacific. Think about the high savings rate, the growing affluence in Asia. What that will create is a huge savings pool which needs to be invested across Pan-Asia. The ARFP concept basically is one which allows the mutual recognition of funds across the whole of Asia. This is a challenge because at the moment it doesn't exist for Asia. Where it does exist, the cross-border intermediation, where it does exist, is actually through European UCITS funds. These are funds operated by the EU. Just to see this, this is a chart that shows for various markets cross-border collective fund activity. As you can see, where cross-border activity exists, most of it is channeled through Luxembourg, Ireland, or the UK. In other words, we are using service providers outside this region rather than tapping into funds offered in Singapore, Thailand, Malaysia, or elsewhere. That, I think, is a significant issue that needs to be dealt with. Here's another example, which is the Asian Bond Fund. If you recall, my issue here was that it wasn't really that easy for investors based in, for example, Thailand to be able to access Asian local currency bond markets at the retail level. The ABF2 was a project initiated by the 11 EMAP central banks in Asia, including, of course, the Bank of Thailand, to create a series of funds that enhanced investor choice by allowing them to access a series of funds across broader regions. And these 9 funds were designed to become available to the public, and most of them are available to the public now. Final example, this is an example that we're working at under the ABMF, the ASEAN Plus 3 Bond Market Forum. Okay. You recall earlier that a lot of the bond issuances undertaken in Asia was done in US dollars, normally under the Reg S issuance umbrella under the US SEC. The reason for that is that those issuances are fairly mobile. You can actually offer these across a wide range of jurisdictions in Asia. The concept of AMBIF is mutual recognition and substituted compliance, i.e., an issuer in the home market would work extensively with their home regulator to structure an offering. Host markets, the regulators in the host market would then accept on a substituted basis compliance undertaken by the home regulator in order to streamline and to ease and to reduce the cost of bond issuances in those markets. That sounds incredibly theoretical, but just think about what Mr. Sarong said, right? He said that PTT was interested to be able to offer bonds across Asia. So to put this more practically, what we're talking about is a Thai issuer going to the SEC, and the SEC working in partnership with the other regulators across ASEAN and Asia to make bond issuance less expensive, and therefore trying to wean issuers off US dollar issuance. That's the whole theory, that's the whole essence of AMBIF. So let me quickly summarize. I actually think we should all support the integration efforts. I think clearly for regulators and for governments, what they're looking in, when they look at regional bond market integration, they're looking for further economic growth. They're looking to reduce the cost of financing. I actually think they're also looking to increase human capital in Asia. Again, think of that example of all the intermediation that is undertaken outside of Asia. Think of all of the work that could be captured in Asia instead of Europe or the US. Hopefully, I think my case study should also show that you in the private sector should also embrace market integration. I think the passporting idea will give the opportunity for funds manufactured in Thailand, for example, to be offered more broadly across the whole of Asia. I think for a Thai bond fund or a Thai equity fund, we would suppose that a Thai-based fund manager would be able to talk about their ability to beat the benchmark much more credibly than someone based in, Hong Kong or Europe or whatever, right? I think I also showed you the example of the Asian bond fund effort, which again is an example that shows distribution is also an important element. There are distributional opportunities here in the private sector. And the third one is the Asian issuance, the AMBIF idea. Now, if you didn't hear the very eagerness that Mr. Sarong expressed in terms of his desire and for his company's desire to issue bonds across the region, then as an investment banker, you're not doing your job properly. So I leave that as an optimistic picture for the future. Thank you.